Hey guys, welcome to this video. Daneng here, and what I want to do on this video is just share with you a couple entry techniques that will be able to help you avoid getting trapped in the market. So what I mean by that is if you ever experienced getting into a trade and it's already hitting a major support or resistance area, and so you think that that's the perfect entry, and you go in and then you find yourself staying negative for a long time because price just keeps on grinding the opposite direction of where you want it to go. And so in order to avoid that, if you implement these two techniques, it'll help you have a better win rate overall, and also help you avoid getting trapped in the market and experiencing these long drawbacks. All right, so let me go ahead and pull up my charts here. So we don't want to use this. Let me see. Let's do USD CAD. Okay. So USD CAD is a currency pair that I'm currently trading right now, and I actually sent this out to some of you guys earlier last week. And if you remember, I told you about these zone areas. Okay, this is from my Telegram channel, and I sent this picture out to you, and I said that okay, so this is the sell zone. Okay, once when price hits up here, anywhere around this area is a good place to place a sell, and you have to figure out where is going to be a good entry, and anywhere here will make you a win, but of course you want to get in at the right spot to be able to reap the best benefits. Um, and of course, we don't know what the market's going to do, but that's why we have a little zone here so that you can kind of play around in this area to see when's a good time to be able to do your short. And then down here, I also have this blue shaded area where I mapped out that this is a high probable area of it reversing back up. And so although this is a day chart resistance area, and most likely price will reverse down, you have to keep in mind that this is a very bullish trend. Okay, so if you're going to be trading with the trend, then what you want to do is just search for areas of strong support and then buy up when it gets to that area. And so for myself, I only trade with the trend except in situations like this where it hits a major support or resistance. And in this situation, it's a major trend going up, but it's hitting a major resistance. And so that's why I'm willing to do a sell on this pair. And of course, it went our way, and it did go down, and it came to this area, and it shot back up. And if I go here, this is really what happens. This is the actual live graph of what happens now. And so of course it went down here, it went up here, and I actually placed my sell order right around this area here. And there was this huge spike down, but this was so quick, I don't think anybody caught this. So it just spiked back down, but it went right back up. It took us all the way up here to the very highest resistance area up here of the zone. And then it started to come back down, and then of course it came back down here. And down here, I placed a buy, and then it went back up, made some money there, and then placed another sell up here, came back down. This one down here, I did not catch. It was a little bit too fast, but you know, but you guys get the point. You have these areas. If you plan out your trade and you know the areas of support and resistance for a certain currency pair and how it could possibly be moving, then you have this range to play around with where you could just buy and sell, buy, sell, buy, sell, buy. Okay, and so you could do this about maybe 2 times. Right now it's going down on the third try, and I would probably be very careful on this third touch down here. Okay, so you really want to see if there is going to be a huge reversal before you try and do a buy again, because sometimes, yeah, it might just start going down and start a downtrend, okay? And likewise, up here, if it reaches up here, you might want to also reconsider doing a sell, because if it breaks through this again, it might just keep on going up, okay? So you want to just keep those things in mind, but once and twice, it's pretty safe to play around with this range, okay? So let's take a look at this, and I'm going to teach you the 2 entry techniques that will help you so that price doesn't just keep on grinding away from you, and you find yourself in the negative for forever. And I see a lot of that happen, especially with the USD MXN, and price just keeps on grinding up, and so many people were pretty hurt by that. So let me see here. Let's get back there to my graph. Okay, so we got this right here, and the first one that I want to go over is the trend line break. So how you do a trend line break is this. I use the fractals by Bill Williams. So the first thing you want to do is just go to indicators, go to Bill Williams, then go to fractals. And I put my fractals on there. And what the fractals are is that they measure the pivot points, the pivot lows and the pivot highs. And so if you are going to be taking this down, then you want to look at the pivots down, the pivots low. And so with these pivots low, you want to look for a trend line break. It has to break through the trend line before you take the short. So in this case, let me see. So price kept on going up. It kind of consolidated a little bit, but it kept on going up. But you're trying to place a sell order, right? But you don't know when is the right time, okay? So what you do is you put these fractals on there, and then you draw your trend line on the fractals itself. So right here to this point, this fractal to this fractal. So you notice, okay, this is the lowest point on this fractal to this low point, okay? So it has to break through this trend line, okay? And the candle has to close under this trend line. And in this case, what happens is that this bearish candle, it went through the trend line and it closed beneath the trend line, okay? Now this is where you will place your sell order. You place a sell order, and of course, went up a little bit, but it kept on going down, and there you got yourself your winning sell, okay? And then likewise with the if you're going you're going to go long, then you also want to do a trend line break for that. And to do that, you just draw a trend line from the first point. You only have to do it from 2 points, from this point to this point. So that's the trend line for that. It has to break through this trend line before you take that long. And so in this case, bullish candle went up, another bullish candle went up, and that's where you would take your long. And because and the reason for doing this is because once when price commits itself to going a certain direction, there's a higher probability that it will keep on going that way, okay? So in this case, it broke the trend line, and it came back a little bit, but it went back up. And of course, if you held on to that order, you would have taken it for probably close to 100 pips, okay? And so you could kind of play around with that, use these, or if you're good enough already, you could spot the fractals. You could spot the pivot lows and pivot highs. Then you could just do it by sight. But these fractals that Bill Williams created, it really helps out map out the pivot lows and pivot highs to make it easier for you. And basically, what a pivot is it's when you have two bearish down, third bearish down, and then you have two bullish candle going up. Okay, so this right here on the bottom would be considered a pivot, and likewise for a pivot high, it's just the opposite direction. This goes up there. Oops. Oops. Kind of messed up here. And this would be considered a pivot high. Okay, so two bullish going up, and then that's the pivot high, two bearish going down. Okay, and it's the opposite direction for pivot low. Okay, all right, so that's the first entry technique to avoid getting trapped, so that you might enter a sell order here and then it just kept on going up and going up on you. If you find that happening to you often, then you can use this and it'll help you avoid that and be able to have better entries into the market. And but first and foremost, I would have to say, if you want to really find the good entries, of course, you want to know about the candles and candle reversal patterns and stuff like that. And I have a whole bunch on my Pinterest account here. You can just go ahead and take a look at those. But you look at all the different candlestick patterns, such as the abandoned baby, dark cloud cover, evening doji star, evening star. And all of this, these are the reliable bearish reversal patterns, the hammer, reverse hammer, the hanging man, shooting star, and things like that, and that you can enter through there. But what this webinar, what this video is all about is not so much about these things, but it's about when you find yourself getting trapped a lot of times and you want to be able to avoid that, then you utilize what I just showed you right here. Okay, it's really going to help you. All right, so that's for that. Let me go over to another one. So this one, so I'm currently in a trade on USD CAD, and also I'm on a trade with NZD CAD. Let me see what that guy is. Okay, so this is NZD CAD, and same thing with this. You can use a trend line break for this also, such as entry right here. This is a very bullish trend right here. It goes up, and then it goes here. And there's a big bearish candle that breaks through the trend line right here, and then you would take the the short order right here. Okay, so this isn't going to give you like the best entries, okay, but it's going to help you avoid getting trapped in the grinding up market or the grinding down market. Okay, so you're still gonna you're still gonna be looking for a win here because it's already kind of going down. There's this huge bearish candle first, and then it went bullish. There's a little spike here, but that's how you do that. And then let me go over the second part, the 15% commitment rule. What this one is that it will allow you to be able to, again, avoid getting trapped in the market, and at the same time sometimes even get a better entry by using this 15% commitment rule. And basically what that is, I'll show you here. Let me go and delete these fractals out here. Okay, so what the 15% commitment rule is that the price has to move from the big move. It has to move at least 15% the opposite direction of its last big move. Okay, so once when you have your period separators here, then each of these are different days, okay? And what you want to do is just measure from the lowest point from this day. That's the last big move. It was from right here, and it went all the way up. Oops, lost it there. Went all the way up here. So you're looking at a 64 pip move, okay? So 64 pip move, you take out your calculator, and it has to move down at least 15% of that 64 pips. So I'm going to do 64 times 15%. It has to move 9 pips down, okay? So now, when I take a look at this, it's already moved at least 20 pips down, okay? So on this one right here, NZD CAD, I actually had my sell order like right around here somewhere, okay? So that's where my sell order was. Now, sometimes I do give out signals too, and so sometimes if price is moving too fast and I send out a signal, I've already placed mine, but I send out the signal, and then by the time you see it, price has already gotten down here, right? So in this case, then you don't want to just go ahead and place a sell hit right here, because it might just move up against you like this, right? So what you do is you just remember this 15% commitment rule, okay? Because it's already moved 64. You need it for it to move at least 9 pips down. So it's already moved 20 pips. So right at this point right here, you start to see it going up. You see this bullish candle? It starts to go up. Now you take out your Fibonacci tool here, and from the last bearish candle, from the first bearish candle going down, you want to measure down to this last bearish candle, okay? So here you see, okay, you know that price normally retraces around 61 to about 79, okay? So I like the 61%. So so you can actually just do place a sell limit order at the 61%, okay? So you place a sell limit order at the 61%, and then just let the market take you into it going back down, okay? So let me delete this off. Okay, so yeah, just keep in mind, I know this is, I hope this makes sense, because this doesn't, it's kind of hard to see because the price has already moved that direction. But let me see if I can fix this up here. No, no, no. Where is my little drawing tool? Hold on. Customize. Let's go to rectangle, insert it. Go. All right. So let's just say this blue shaded area has not happened yet, okay? This blue shaded area has not happened yet. And you want to take this short, but you want to make sure that it just doesn't keep on grinding up, and you want to use the 15% commitment rule. So again, what you do is you take from this point up to this point, measure it, it comes out to 64 pips. Now, the price has to move 15% of that 64 pip, so that comes out to be about 9 to 10 pips. So of course I measure this to this bearish candle down here, and I see that it's already been 20 pips. Now, so that qualifies for the 15% commitment rule. It's committed that it's going to be going down. So at this point, I don't want to just place a sell right here. I'm just going to do a sell limit. You take out your Fibonacci tool again, from the first bearish candle here down to the last bearish candle before it starts moving back up there. And you place a sell limit order right up here in the 61% area, 61.8% area, okay? And then let the market take you down. It'll come back up, hit it. Sometimes it goes up to the 79, okay? And then it'll take you down with it on that trade, okay? All right, so hopefully you found value in these two trading entries, and help you avoid getting trapped in the market and be able to have a better win rate overall. All right, thanks, and I will catch you guys on the next video.